Okay, let's do one example calculation with calculations for ABC costing. We already have understood the purpose and the reason, logic behind this ABC activity-based costing method. We understood what are overheads, what are cost drivers. We understand why do we need to have separate OARs and so on. So we got, I mean, the full theoretical understanding of the subject already. Now let's see how it works, okay? So we'll solve one example together to see how ABC costing method we will add to the numbers. So first steps in ABC, where to begin? What do we do? First, we identify the major activities. These are the activities which you call overheads. These could be production overheads, these could be non-production overheads as well. So first you identify activities. For example, one activity is delivery cost. It's an overhead, delivery cost. Then you group overheads into cost pools, because it is possible that you have many different activities which are related to each other, or many different costs which are related to each other. Because when I say delivery cost, so it will have many different costs, like, the cost of the delivery truck itself, which mean the insurance of the truck, the depreciation of the truck, the fuel and maintenance of the truck, repair of the truck, plus the driver which is driving the truck, maybe the loader, that is also part of the delivery cost. So all of them, we put them together, we group them into cost pools. So we make one cost pool which has several different costs related to one particular activity. So we call them cost pools. Then we identify the cost drivers. So once we say, okay, these are 10 different costs, I can group them together in one cost pool, which is called delivery cost. Now, why these delivery costs am I incurring? What is the reason? What is the driver? What is the cause of these costs? That is number of deliveries. The more deliveries I do, the more delivery cost I will have. So cost driver will be the number of deliveries. So for delivery overhead, number of delivery will be the cost driver. And then calculate cost per unit of cost driver. So if I'm incurring $20,000 delivery overhead or delivery cost, and then I make maybe, I don't know, 1,000 deliveries, I say, okay, $20 per delivery. That's my cost. I just ignore the distance kilometers. I'm just taking it as one number, okay? Just for the sake of simplicity. Otherwise, if you go into detail, you have to calculate the kilometers which you drive. Anyways, you find out cost per cost driver. So one delivery cost me $20. And then I will see which department is using how many deliveries. One delivery is $20. You used 100 deliveries, $2,000 to you. You use 200 deliveries, $40,000, $4,000 to you, and so on. So, and absorb activity cost into production, and then into different production or whatever steps you have, you charge the cost based on the usage of that activity. We take one simple example. Let's suppose we manufacture three products, A, B, and C. And what cost do we have? Direct material for product A, B, C is 5, 10, 10. Direct labor is 10, 5, 5. So you got prime cost. Prime cost, here I put direct material, direct labor. You call it prime cost, but actually you should remember that prime cost is not only material and labor. Prime cost means all direct cost. So all of the direct cost, I just put here two, there could be others as well. So all the direct cost, you add them together, you call it prime cost. So I've got a prime cost of 15, 15, and 15 for all these three products, okay? And then I need, because all the direct costs are prime cost, and then there are indirect costs which I have to add, and those indirect costs are called overhead, and that I need to do the working based on ABC, okay? So far it is simple. I know that my direct cost is 15, 15, 15 for three products, but then I have some other overheads. And some part of that overhead I have to give to each of this A, B, and C. And how do I allocate? Let's suppose I've got $50,000 of total overhead. So how do I split that 50,000 among these three products, A, B, and C, for each unit of A, B, and C? This is what we are going to do now. So let's see that what overheads do we have? What are the indirect costs or overheads do we have in the business? So here, for us, overheads are machining, 55,000. QC, quality control and setup, $90,000. Receiving, inventory receiving or goods receiving, $30,000, and packing, $15,000. So I've got these four different groups of cost. 55,000. Okay. 55 plus 90 plus 30 plus 15. It makes me $190,000. So my total overhead is $190,000. Now you have these cost pools. Now you see what are the drivers. For example, for machining, the cost driver could be machine hours. For quality control and setup, cost driver could be production runs. That how many times do you run the production and production setup. For receiving, you have components receipts, how many orders have you received, and for packing is customer orders, how many orders you have delivered. So these are the cost pools and these are the cost drivers. Now what we need to find out, that if we are spending $55,000 on machining, how many number of hours do we have? If we can find out the number of hours, just for the sake of simplicity, imagine you have 1,000 hours. So then you will divide 55,000 with 1,000 and you say, oh, $1.55 per hour. Now that's a very big number, but I just put it for the sake of simplicity. So this is what you do. First, you find out your overhead, then you identify your cost driver, and then you find out the number of cost drivers. So what are the total number of machine hours? What are the total number of production runs? How much are the total number of component receipt? How much are total customer orders? Let's suppose that you have got 1,000 customer orders and you say, oh, for receiving 1,000, for delivering 1,000 customer orders, I spent $15,000, which means that each packing customer order, it cost me $15. 15,000 divided by 1,000, $15 is cost, packing cost per order. This is how I'm going to do it one by one. Okay, so we move forward. Calculate a cost per unit of cost driver. Like I said, cost per unit $15 per order, or maybe $10 per machine hour, and so on. This is what we need to do in step 3. So we say that 3 products A, B, and C. So how many machine hours per unit does it take? So it takes 2 hours, 2 hours, 2 hours, same number of hours for each product. And then we say, but this is for one unit. So I need to find out what are my total machine hours. This is only 2 hours, is for one unit. So how much are the total number of hours? I can only find out if I know that how much did we produce. So we produced 20,000 hours of A, 20,000 units of A, 25,000 units of B, and only 2,000 units of C. So it means that the total number of hours for A, B, and C are 40, 50, and 4,000. 2 into 20, 2 into 25, and 2 into 2. So the total number of machine hours are 94. So it looks like that you have 94,000 machine hours. And then if you remember that your machining cost was $55,000. So it looks like that my cost for machining is $55,000. And after spending $55,000, I got 94,000 hours. So now I think we can calculate cost per hour. It should be very simple. 55,000 divided by 94. Each machine hour cost is 0.585 per hour. So 58 cents or $0.585 per hour is the cost. And now you will allocate it to each product. Okay, so let's go back and see machine cost total. For product A, it has total hours 40,000, because 2 hours per unit, 20,000 units, it used 40,000 machine hours. Multiply 40,000 with 0.585, so you give 23,404. So out of this 55,000, $23,000 you give to product A. To product B, it is taking 50,000 hours. So 50,000 multiplied by 0.585, it gives me 29,000. And then here only product C only takes $2,000 from machining overhead. So if you see that your machining overhead total $55,000 is divided between these 3 products in this proportion. 23 to 1, 23 to A, 29 to B, and only 2,000 to C. C has taken very little, only 2,300 out of 55, because production was very little, only 2,000 units you made. total 4,000 hours they consumed. They used more machine hours, and therefore we give them more overhead. This is the concept of activity-based costing. The overheads are allocated based on the consumption of those activities. Okay, so and it looks like a fair distribution. It looks like a fair distribution, very logical mathematical distribution of overhead cost. This was my first overhead was machining. Which one is the next? Second is QC and setup. Now I need to see how many production runs have we done. So we go back to the next slide and we say that machining cost is 23, 29, and 2341. And then we say that how many production runs do you have? So production runs, we have ABC 10, 13, and 2. So total 25 production runs you did. And I remember that if I don't go back to the slide, $90,000 was the cost for this production setup. Your setup cost was $90,000. So after incurring $90,000 overhead, you made 25 production runs. You divide 90,000 with 25, $3,600 per production run. Now simply multiply 10 with 3,600, 13 with 3,600, and 2 with 3,600. You can divide this 90,000 in this proportion. 36,000, 10 into 3,600. 13 into 36, 46, 2 into 36, 72. So this 90,000 now, it is also divided among the three different products based on their consumption or usage of this activity. And now I have my total. This QC and setup 90,000 is divided. Before it was one number 55. 55 I divided into three among the three products. And then QC 90,000 we again distributed among these three products. And then you can ignore this part. This is just repetition, okay? Then you go to the third part. What is third one? Third one was receiving goods. I think that was $30,000. You spent $30,000? I think so. Let's see it. You need to find out how many customer orders, how many times did you, so it's not customer order, it's about receiving goods. So how many times did you receive goods? Component receipts were 10, 10, and 2. So total 22 receipts. $30,000 divided by 22 receipts, it is 1363 per receipt. Then simply multiply 10 with 1363, 10 with 1363, and 2 with 1363. So the third overhead, which was receiving 30,000, is again divided among the three products A, B, and C in the proportion in which they used it. And then we move to, okay, so we just show the table. This is like, okay, receiving 30,000 is shared between the three products A, B, C as 13, 13, and 2728. And this total, you can ignore it here. These are number of units. We know 20, 25, 2. We will discuss it later. And the final one was packing cost. It was 15,000. And it says that packing cost is just divide 15,000 by 3. It says that you receive equal number of orders across all products. So if you receive equal number of products among all products, so then 15,000 you simply divide it by 3, and it is 5,000, 5,000, 5,000 to each one of them. So you got 555 because equal number of orders. Now, if you make a total, so this is, if you remember, your total overhead was 190,000 for 4 different cost pools, all of them 55,000, 90,000, 30,000, 15,000. And that 190,000 we divide it like this, okay? So now we make a total that how much is the total for each one of them? So if you make, so 78,000 goes to product A, 94,000 goes to product B, and 17,000 goes to product C. You make a total of these numbers, it will remain 190,000. Your total overheads for 4 activities, okay? Now you got 78, 94, and 17. Now, this is the total overhead. This is not overhead for one unit. This is overhead for the total unit. Total, all units of A, all units of B and C. And now we want to see what is the cost or overhead per unit of A. So what is the production of A, if you remember? We produced 20,000 units of A, 25,000 units of B and 2,000 units of C. So we divide these numbers and we get 3.90 OAR, overhead absorption rate. So my overhead per unit of A, every unit of A, I should give 3.90 overhead because I just divided these numbers, okay? You divide these numbers, 3.79 and 8.63. That's huge. Product C is taking a very big overhead. You know why? Because it is taking a big delivery cost. Delivery cost is huge. Remember, you made here 20,000 units. Here you made 25,000 units, and here there are only 2,000 units. But the delivery cost, packing cost is same. Why it is same? Because what it looks like to me that probably when customer order A, they say, please send me 5 units of A, 5 units of B, or maybe 15 units of B. So you are getting large orders. But in case of C, it is just like every customer calls you and say, send me 1 unit of C. Okay, so small orders. So the size of the order is small and therefore the number of orders are more. And that has resulted a huge overhead of 5,000 here as compared to the number of units. And therefore the total size of overhead goes higher. Now, what impact it will have on my final cost? So see here. Now we have to absorb these overheads into my total cost. So if you remember, we calculated before our prime cost was 15, 10, 5, 10, 5, 10, 5 for 3 units. It was 15. Then we had to add our overhead cost, which is 3.9, 3.79, and 8.63. My total cost comes out to be, production cost comes out to be 18.9, 18.79, and 23.63. And then if you see your selling prices, let's suppose these are the 3 products which have the same selling price. It may be orange juice, apple juice, and pineapple juice. Maybe it's the same product. So the selling price is same. Orange juice is in big demand. Customer says, give me 5 orange juices. Apple juice is in big demand. Give me 5 apple juices. But the third one is strawberry. Nobody wants it, let's suppose. And this is send me 1 strawberry juice. Selling price is same. As a result, product 1, it's in profit. A is in profit, B is in profit, and C is making a loss. Now you exactly know where the loss is and what is the reason for the loss. The reason for the loss in this case is small order size. If you don't have activity-based costing, what will happen? That probably you will not know. You will say that, oh, this business A, B, and C, I sell them together and I make a loss. You will say, because if you see that this profit, this loss is bigger, you will say, oh, my company is in loss. This business is not good. You will do 2 things. One, maybe you will say, I have to increase my price from 20 to 22 because this price of 20 is not giving me profit, because you don't have this analysis. You only have a loss figure and you want to increase the profit and you increase the price. As soon as you increase the price, customers will stop buying from you. Maybe one reason. Second, you say, oh, this business is not good, I'm closing it down. You need to understand that when a business goes into loss, it is not that all of the products are making losses. It is not that every process is loss-making process. Many processes and products are profit-making. Only some of them are making a loss. And you have to identify which product is a loss-making product. It is just like that. If I say that I'm not feeling good today, I'm sick, I don't want to, leave my bed, it does not mean that all organs of my body are not functioning. Maybe some part of my body, some organ of my body is not working good and it makes me, sick the entire body. Okay. So you need to identify which is the problem area. So if I do activity-based costing, I can identify that product C is the problem area. A is doing good, B is doing good. No need to touch A and B. Do something with C. Do something with C. What can you do with C? I can ask my customers that if you want C, you have to place minimum 3 pieces. So this is the minimum order quantity for C, so that my packing cost or delivery cost should go down. And if the customer says, no, I don't want 3 pieces, I say, then you have to pay extra for for the delivery cost. I should charge extra, or maybe I can increase the price. Increasing the price actually is not a good idea. Usually you put two conditions. Either you have a minimum order quantity, or you say you pay extra for the delivery. Okay. But you can only take this decision, like we said in the very beginning, that activity based costing, it gives you better information. Yes, it gives me better information. And it results in better decision making. Yes, it results in better decision making because I exactly know where the problem is. Now, let me show you. If we had not done this activity based costing, and if we had only done that um, traditional absorption costing method, how would we have done that? So in traditional costing method, we say OAR is my total overhead divided by my budgeted activity. My overhead was $190,000 and my total activity was machine hours. And I remember, my memory is good, there were 94,000 machine hours. So if I, for product A, B, and C, 40,000 hours of A, 50,000 hours of B, and 4,000 hours for C, I remember. So 94,000. So 190,000 divided by 94,000, your overhead absorption rate, your OAR, would be $2.02 per hour. So if I have $2.02 per hour, and I say, okay, now let's start doing my prime cost for A, B, and C. For A, it is 15. For B, it was 15. And for C, it is 15. How much overhead it is using? It was using 2 hours. If I go back to the screen, you can see that all the three products were using 2 hours each. You should trust me, I don't want to go back so many slides. It was using 2 hours, every product. So if every product was using 2 hours, so it is 2.02 per hour, which means 4.04 overhead will be here, 4.04 here, 4.04 here. So your cost of each product would be 19.04, 19.04, 19.04, and you put a price of 20, 20, and 20. Okay, so all the products would look in profit. You are making 0.96 profit here, 0.96 profit here, and product C also looked in profitability of 0.96. And you say, you know what? All products are making profit, but they're making very little profit. Let's do something. This is a wrong information. Product C is not making profit. Product C is actually making a loss. If you do absorption costing, you will see this picture, which is not realistic. If you see activity-based costing, this is the picture which is correct. Okay. So this is how ABC costing costs drivers, find out different OARs, and then allocate the overhead based on the consumption of OARs, those activities, and find out the total cost.